Firstly, I will introduce myself. My name is Sarah Corley. I'm CEO of the Alliance of Digital Finance Associations, and it's my absolute pleasure to be organising this webinar today along with Global Impact FinTech Forum. I'll be introducing you to our moderator, Lotte, shortly. But first, let me just give you a couple of housekeeping rules, and then let me set a little bit of a tone for the webinar. So today's topic is Buy Now, Pay Later. I've been running webinars, as I was telling the other panelists, for a number of years now, and this has been the first webinar where I've had so many people emailing me their questions and comments on social media. So it seems like this is a topic that you really want to hear about, and we're excited, all of us on the panel, to debate and discuss with you today. So I hope you all enjoy it, firstly. Just to remind you that we are recording the session, so we will send you all a link of the recording. We would love for you to, A, not only rewatch us, but B, to also send that link to all of your colleagues who would find that interesting. So just because they didn't sign up today doesn't mean that they have to miss out. We also will try and get around to answering as many of your questions as we possibly can. So do use the Q&A function, which you'll find on the bottom screen of the webinar. If you can use the Q&A, it just makes it much easier for us to check that rather than using the chat. But feel free to use the chat to introduce yourself and say hi to us. We'd love to see who's on the call with us today. So those are just a few housekeeping things. So as I said, Buy Now, Pay Later seems to be a topic that we're really talking about a lot. But is this new? What are the questions? What are the concerns? What are the pros and cons? We're definitely seeing a boom in this industry, particularly in Europe and Australia. And we're also beginning to see more uptake in Asia and Africa. So I'm delighted that we've got a real global panel of experts to talk about this particular topic today. I'm also really delighted to be able to tell you a little bit more about the Alliance before we jump straight into the webinar. So the Alliance is partnering with GIFT for this webinar. It's our very first collaboration, and many collaborations more to come. So for those of you who are able to, we're going to have a short MOU signing ceremony immediately after this webinar finishes. And please do stay on the call and join us for that. The Alliance of Digital Finance Associations officially launched in September last year through the signing of agreements between its 10 founding members, who are country-based digital finance associations. And our purpose is to unite the global digital finance profession to increase access to digital financial services and achieve greater inclusion. And we've started to definitely unite some professionals on the call from across the globe today. Our plans for the Alliance began back in March 2020, and we have been working with these local country-based associations to shape the constitution and what our activities are going to be. We have members from countries from Bangladesh, Ethiopia, Uganda, and Philippines, amongst others, and we're partnering with other organizations in the space, and we're really happy to be collaborating with GIFT and their global membership base of talented individuals today. Together, we can advocate for an ethical digital finance profession and greater financial inclusion. I'm going to hand you over to my co-planner and moderator for this session today, who is going to introduce the panelists and tell you a bit more and get our conversation going. So Lotte, over to you.
Thank you, Sarah. It's a great pleasure to greet you to this Buy Now, Pay Later webinar. I'm Regional Director for Asian Development Bank. Looking back over the past 2 years, I think we can all agree that COVID has highlighted the importance of digitization and all the opportunities that the right solutions can have for those who are financially excluded or underserved. And I think GIFT and the Alliance are in an excellent position to contribute to this development. And GIFT is a global nonprofit think tank. It's a diverse, inclusive financial fintech forum with about 500 members from over 70 countries that span all regions. We have members from governments, regulators, multilateral agencies, industry, banks, fintech, blockchain companies, academia, and thought leaders. Our goal is to work collectively with varied stakeholders to find solutions by leveraging disruptive tech, focusing primarily on innovation for impact and inclusion. And importantly, we're building relationships with organizations like the Alliance of Digital Finance Associations that advocate the role of fintech and financial inclusion. I am very excited to moderate today's Buy Now, Pay Later webinar, and I'm delighted to introduce today's speakers. First, we have Sandeep Bala, Head of Financial Services at Growth Sari. We have Edwin Biarohanga, Digital Finance Expert. Sarah Corley, you've already met her, CEO of Alliance of Digital Finance Association. Deidre Klopper, Payments Expert at Payment Genes, and Diane Tate, Chief Executive Officer at Australian Finance Industry Association. This is going to be a packed session, and lots of questions have come in already, as Sarah mentioned, so I think we should just jump right into it. So let me start with you, Diedrich. The perception of buy now, pay later is around seamless shopping and consumption as a payment, and as a payment expert, and you also work with companies throughout the payment value chain. So just to start us off, can you just briefly explain what BNPL is?
Yeah, thanks, Lotte. Well, buy now, pay later, BNPL is exactly what it says. It offers the consumers the possibility to make a purchase directly and paying for it later. It's a massive payment solution used specifically in Europe, where I'm situated. And it allows the consumers to transact. The merchants will be paid directly by the buy now, pay later facilitator. And the consumer then has a debt towards the buy now, pay later facilitator, which it will pay off either in one lump sum payment after a set period of time or in several installments. It allows the merchant the possibility to make a sale when the consumer perhaps doesn't have the financial means to do that at the moment. And it allows the consumer to spread the payments of, for instance, a high value transaction over a period of time.
Thank you, Diedrich. So I think this is really something interesting. I can see that many people get interested in and hooked on the buy now, pay later. Sarah, the Alliance of Digital Finance Association supports financial inclusion by, among other things, promoting industry best practices, including ethics. Can you just give a brief summary of the concerns and potential of BNPL and its importance for the industry?
Sure, and I'll give as briefly as I can, because I think we're all going to unpick many of these issues in more detail. But it's quite an exciting project in terms of, it's one of those things that involves collaboration. So we've got the buy now, pay later provider and merchants. So we've got a great new partnership sort of happening there. It's also a great example of an embedded finance product. Actually it's something that is there, easy to access right when you need it at that moment of buying goods. And it's a great example of disruption. It is going to disrupt, without a doubt, the credit card industry, which has been going for a number of years. Buy now, pay later allows consumers to get the goods straight away. So we may know the layer buys or layaways industry, which in particular we have, in Africa and parts of, in Asia as well, and it disrupts that industry too. So it means that, the consumer has as quick and much easier access to credit. You need a lot less financial, data, if at all any. And obviously those as you're paying back in those installments, you're not paying high interest or any interest at all in some cases, unlike credit cards. So, there is some great aspects to the innovation. However, what I think we need to really start unpicking and understanding is, are we creating, a huge level of debt for individuals that is going to be very difficult for them to pay back? But also, are we lending so much money that there's some concerns about financial system stability? Also, over consumerism, are we encouraging people to buy too much or shop differently, which is very much against the the green principles and practice that we're trying to see in today's society. And there's not much regulation, if at all, on this industry, which obviously then brings up issues around consumer protection. So yeah, I'm looking forward to digging into more of these pros and cons in our conversation.
Thank you, Sarah. And you mentioned an interesting topic here, disruption. So that kind of leads me into a question to Sandeep. Sandeep, you run a very successful B2B BNP business. Can you just tell us about your experience in building and scaling that business?
Sure, thanks, Lotte, and welcome everyone to the session. So I'm part of the financial services business of a company called Growsari. So it's GROWSARI. And Sari stores in the Philippines are what we would call in the rest of the world small mom and pop shops. Sari in Tagalog means everything store. So these are basically stores that are in the neighborhoods where 80% of the Philippines population lives in the community, and they go around the corner for the daily needs. So these are not going to a regular organized retail to buy their groceries. They are going typically to buy their, let's say for their lunch or for their dinner. They literally buy what they need for that day or for even that meal. And that's really the enterprising nature of it. So the stores, of course, as a result of which stock enough to really cater to that neighborhood needs. Most of these stores today run in as part of their household. It's an extension of the household. They may live upstairs, they may live in the back. their stores turn into, one of their rooms turn into their stores, which is where they supply. So one of the fundamental challenges that they have faced in the Philippines is how to get the distributors to get small orders delivered to them. And of course, as a result, there's a massive supplier systems that sits between the manufacturers, the distributors, the suppliers, the smaller suppliers, the smaller suppliers, the smaller suppliers, until you get to actually that store that probably wants 4 bottles of Coke to be delivered every week or every 10 days. So I think when grocery kind of saw this business model, they kind of went ahead to actually, their core business model is literally taking the supplier network out of the system and really digitizing the whole end to end. So basically taking directly the last mile, in which case these are the stores, and connecting them to the manufacturers. And the way they did that was not just connecting them on an app, they actually built their whole procurement network. So we own our own logistics, we own our own warehousing, and it's a transformational stuff because we take enough margin out of the system. When sort of the buy now pay, when the financial services play came, basically what we tried to solve for was that a lot of these stores, just because of the nature of their inventory management, they literally buy enough to sell within the next week or 10 days, and then the cash that they get used to buy the next order. So they literally run this vicious cycle around buying everything on cash, and whatever cash they get, they buy their next order. And we saw a credible opportunity to saying that, hey, look, during that inventory cycle of these stores, is it possible to give them some form of credit that allows them to literally not pay us upfront, and they're constantly squeezed between the amount of the money they have in their hand and the order size. So when we started looking at what could it be, we literally looked at buy now, pay later, which is literally, as Deirdre said, was, hey, can we help them to buy now and pay later? So we started it slowly. We made all the stores credit eligible. So only the stores that are credit eligible actually go through the process. And we managed it through an inventory cycle. So a couple of things we did that was very different. One, we made sure that we managed the tenor of the buy now, pay later to the amount of time it takes them to sell the inventory. So if it does 7 days before they order again, you must pay us your buy now, pay later within 7 days. So we just sort of went ahead and built a product or a capability that was lock and step with the ways the businesses were operating. And as a result of which, to your point, we built it successfully. It's a profitable business now. It's a very scaled business, but it's built to match the inventory cycle of each store. And so that's how we went about it. It was a very disciplined approach. And today we are good to say that it's a profitable business, and it's a significant part of how the stores order on our platform.
Thank you. That's really quite interesting. So you talk about the whole cycle, and that kind of leads me into a question to Edwin. You provide technical support to help tech businesses, digital economy partners, and startups to scale in existing and new markets, while also ensuring that investors realize profitable returns on investments. So what is the distinctive feature of BNPL? Is it the technology?
Thank you. I think I'll just add to what Sandeep and Deirdre said. The distinctive feature of buy now, pay later is really the offering to the customer or to the retail store. Because as we've realized, the disruption is around providing something that will replace or give me time to maneuver my inventory cycle. So for me, the distinctive BNPL features is not really the technology, because he said they just innovated, and even here in Africa, BNPL will be innovated around certain existing relationships between the value chain players. For example, from the supplier to the retail, which is already in existence. So what the distinctive features are, probably little or no interest rates, flexibility of repayments, short approval processes, vis-a-vis the mainstream alternative, which would be probably accessing credit from financial institutions, and the requirements which a small retail shop may need to access either this break or even just have these credit facilities sent to them. So that's the unique, distinctive thing about buy now, pay later. The approval process is shorter, little or no interest rates, and so forth and so forth. Thank you.
Thank you, Edwin. So that really provides a really nice segue into Diane, who is from the Australian Finance Industry Association, more on the regulatory side. And the Australian Finance Industry Association is a global leader in setting standards for BNPL. And already in March 2021, APIA's BNPL Code of Practice came into effect. And this code goes above and beyond the law in Australia, and it sets best practice standards for the sector and also strengthens consumer protection. Now, as has been mentioned by previous speakers today, BNPL is by many seen as a kind of a risk-free credit that utilizes a loophole in regulation. So since no interest rate is charged, BNPL is also not regulated. So my question, Diane, should BNPL be regulated?
Well, thank you. It's a big question. Look, in Australia, I think the first thing to say is that buy now, pay later is regulated. So I'll speak from an Australian perspective. I know that jurisdictions around the world are looking at what sort of regimes they need. For example, the UK regulator is looking at a code or regulation there. So if I take a step back and, one of the things I think that the buy now, pay later sector in Australia is really proud of is that we've been able to introduce a well-first code, and that contains a lot of the consumer protections that otherwise would have been found in our financial services laws, our payments laws, and our credit laws. And so we looked at those three different regimes and said, look, none of them really fit how the product is working and how consumers are dealing with the product. How can we take the best parts of those laws and put some cherries on top and create a self-regulatory framework? So I'll come to the code in a moment, but I do want to bust that myth about it's not regulated. In Australia, it's highly regulated. Our conduct regulator has responsibility for it. There are a number of other regulators in Australia, including our competition and consumer protection regulator, our privacy regulator, and also the courts have jurisdiction as well. There are a number of laws that apply to buy now, pay later, including things around misleading and deceptive conduct for advertising, design and distribution obligations around the products, initial offering and how it gets out to market. So there's already a lot of regulation. I think what is being said is it's not regulated under our credit law regime in Australia, and should it be? We have a debate at the moment happening about whether it should be inserted into the law. From our perspective, we think that the code sets the right standards in terms of, as I said, bringing together the parts of our traditional laws and going, well, how does this new product work and how are consumers using it? And I think that's a really important thing that we discovered with some research that we did recently, and I'm happy to send a link through to that report for others to have a look at. It definitely showed that this product is disrupting how consumers deal with money and finance and how retailers are accessing customers and participating in e-commerce. So it's offering benefits to both and therefore disrupting traditional methods in both those spaces. And I think that's a really important thing to kind of step back and go, okay, well, who is this product working for? And then where might some of the risks be, or where are some of the sort of more proportionate, targeted, scalable answers we need to have about making sure that the product works as intended for everyone. Unfortunately, we know that some people are going to experience financial difficulties, no matter whether it's a buy now, pay later product or any other product. So how do we maximize the benefits for as many while making sure that the rules suit those who are more vulnerable? And that's the, I guess the benefit of self-regulation is it can be really responsive to how the industry is changing. Just one final thing in terms of the Australian market. It is really exciting because buy now, pay later as a product is challenging, I guess, the norms and allowing consumers to access products and services in terms of their purchasing needs in different ways and faster ways. But what I think is really interesting is that when we look at how consumers are participating and dealing with this product, they don't think it's credit. They're not behaving like it's credit. Under law, it's an installment product. I mean, we've heard, you know, is it sort of new or not? It's digitized lay-by. I have to be careful how I talk about that, because lay-by is a brand of a buy now, pay later product. And I've got a number of members who don't want me to say the words lay-by out loud, but really it is. But it allows people to access lay-by in an e-commerce oriented world. So look, you know, COVID disruption has really fast-tracked some changes that were already in place, which is that consumers are less attracted to credit, more attracted to the structured payment forms that an installment payment product offers, so that they can budget better. Some of the other things we discovered in our research, which I'm happy to go into more detail about, is, you know, consumers think about what essential products quite differently. So we need to think, you know, what does that mean for how people are using, you know, the product and accessing it? If people think differently about what their purchasing needs and wants are, you know, one size fits all ain't going to be the answer to make sure that we use this innovative product in the best way for as many people.
Thank you, Dan. I'm going to keep you on the line a little bit longer because there's come a question from our audience, and so I'll just read it up here. It says, the near instant decision-making associated with these transactions unfortunately makes BNPL schemes attractive for fraudsters. How can payment service providers prevent bad actors from abusing the system?
Well, in Australia, the buy now, pay later code requires all of the signatories to the code, which is, you know, our members and about 95% of the BNPL market in Australia. They are required to do upfront checks, so affordability checks. So they need to have, you know, a system to ensure that the customer is who they say they are. And then on the other side, there's an onboarding process. So they need to make sure that the merchants that they deal with, the retailers that they're partnering with, are also verified in terms of that process. So it is frictionless for the system once it's up and running. But I haven't heard of issues in relation to fraud being an issue through buy now, pay later. It doesn't mean it's not possible, of course. I think, you know, criminals are increasingly becoming more savvy with, you know, sort of cyber security, cyber attacks, that sort of thing. But frictionless does mean faster and easier and simpler. But as long as the system around it is set up to ensure that those who are engaging in that system have been verified and checked, I think that's what's important.
Great, thank you. There are lots of questions coming in. I may get, I'll come back to some of those questions, but we'll continue with a few. We have so much to cover today. So I want to talk a little bit about consumers. And I'll turn to Diedrich. If you can just tell us a little bit about the consumers that use buy now, pay later, and how do they benefit? Are they buying to extend payment or to purchase more? And what do you think the impact will be in 5 to 10 years?
Yeah, thanks. Indeed, so we see that the type of consumers that are using buy now, pay later are somewhat between the age of 20 and 50. Technologically some savvy, but quite surprisingly for us when we first found it out, they vary through all income levels. So from the lower incomes up to the high incomes. We see that from a survey that was performed by Capterra, that of the consumers that use buy now, pay later, 51% use them for fashion, 36% for electronics, and then there's a whole list of other product categories that they use them for, but those are the most dominant ones. And I think really, how do they benefit? It's a really quick credit score that they get, and it allows them huge flexibility in their cash flow management. Most of the people that were questioned in this research also indicated that the main reason for using buy now, pay later is to extend the period when you have to make the first payment. And pretty much straight on after that is that they don't have sufficient funds at the moment of making the purchase. So we really see that it focuses around the cash flow management of the consumers. And of course, this is pretty unique that you have such a powerful financial tool which can be used and used by consumers on such short notice that will really allow them to manage that cash flow.
Great.
I was going to say, can I just jump in? And there's also been a question about, the sort of consumer attitude as to whether it's seen as credit in Australia or not. And I might just sort of pick up on comments just made as well, because very similar to the research that we've done in Australia in relation to the biggest benefits for consumers seen as managing cash flow. Of course, in Australia, not paying interest, because there are, buy now, pay later in Australia doesn't charge interest. So, the attitude to shifting, using a credit card, getting a personal loan, paying that off, a personal loan, you do know what repayments will be, but it's over a longer period of time. A credit card, you have a limit, but you can spend within that limit, but it's not known. I think the benefits that consumers see with the installment product is that it's upfront. It's known what the structured payment replan will be. So it gives them that confidence around using the product. In Australia, a little bit of a different story. I have to say, we've found that a number of the customers of buy now, pay later, they don't have credit cards. They're not using credit cards. It's actually quite distinct. It's sort of different markets. So there's this real sort of appetite to use a credit product for, the bigger purchases and the long-term, decisions that you're needing to make about, using finance in a certain way. Whereas this buy now, pay later really was used for the smaller transaction. That's not to say that every business model in Australia is that. There's quite a range of buy now, pay later business models where you sort of, from the kind of buy a pair of jeans through to buying solar panels for your home. So that wide range of business models also caters to a very wide range of customer needs. I have to say, though, the broad brush sort of response to it is that most customers already have the money, have the cash flow, particularly if it's solar panel. They've got a mortgage, they've probably got a redraw or a cash accessing, their mortgage and reducing their repayments. They just don't want to use the cash for the solar panel. People are often using for the smaller purchases as well. They've got money in their account, but they're being more savvy with using their money and maximizing, the ability to be able to stretch out those payments. So we're seeing an attitude in the customer base making choices about credit, more traditional or bigger purchases, and buy now, pay later for really those budgeting cash flow needs.
Great, thank you, Diane. Sarah, did you want to come in on this as well, or did I thought I saw a flag come up? Otherwise, we'll continue on.
Carry on. Let's get
okay, great. Thank you. Well, I'm going to come to you now anyway. I'd like to hear from both Sarah, Edwin, and Sandeep on if there is potential for financial inclusion, and if BNPL is a tool that can push financial inclusion.
Well, from my perspective, I think, yes, there's very much a huge percentage here. So what we're hearing and seeing in, Australia and Europe and North America, is great uses of buy now, pay later, but how it's going to look and the kind of uptake and its usage in Africa and Asian markets might look slightly different. And Sandeep obviously described how buy now, pay later is working really well in the Philippines. So some of the applications of the model might look different, but I think the key thing that we need to remember here is, a lot of those decisions when it comes to things like loans and credit cards require a lot of history. And much of that credit history will not be known. And also along with the documentation and KYC process, those two things are huge barriers for many people to be able to access any form of credit. So by lessening some of the documentation that's required, providing smaller amounts of accessible credit basically through buy now, pay later, might well be able to bring new people into the market, be able to start building that credit history that's needed. So, different and more products and services are made available for the individual. So I'm excited that if done well, and if we really consider how people are going to pay back and how those installments will work and not giving too much money too quickly, there is real potential here for inclusion.
Thank you, Sarah. Edwin, any thoughts you have on potential for financial inclusion?
Yeah, thank you. Massive potential for financial inclusion, especially on the African market. As we know, as we've heard from Diane and the rest, the buy now, pay later normal consumption or normal consumer is really personal consumption to buy an electronic or something. Here, it would be a massive financial inclusion tool because Africa is home to millions of smallholder farmers who cannot access finance or agri inputs because of that seasonal. So constructing a buy now, pay later model where they access agri inputs and then pay at the time of harvest only increases production and increases their livelihoods, and also makes it more comfortable for them to deal with what it is they need to deal with, and that is to increase production. So with that type of model, and to address the bedrock of Africa's economic progress, which is agriculture, buy now, pay later will be a fantastic tool for governments, for development partners to try out as far as smallholder farmers are concerned. You can also scale that around microinsurance for women who are the larger percentage of these groups probably have a buy now, pay later micro health insurance product, and really get the obstacles and the bottlenecks out of the way, which are too stringent for the majority of these people. So buy now, pay later would be a fantastic tool if well modeled and well regulated. I'm seeing some people have begun to even look at buy now, pay later as a tool to enhance clean energy and address some climate change effects. And how are they trying to do this? They're really just saying, look, we're providing buy now, pay later scheme for these products that do not harm the climate. You want to look around a policy where you're saying, okay, if you're buying a product and you have to wrap it in a polythene bag that is going to harm our environment, then we're not going to, you pay upfront for that and then regulate it in economies where it is not banned. So it's a massive tool, massive opportunity. Like I said, and Sarah said, the devil is in the details of regulating it and attaching it to a proper use case.
Edwin, I'm going to keep you on for one more question that's coming from our audience, and I'll read the question for you. It's in Africa, the BNPL is peaking up very fast. How will fintechs work towards not hitting the tipping point where they convert and become debt collectors due to lack of payments, or that lack of repayments?
Yeah, there's a very thin line between being a buy now, pay later service provider and automatically going back into debt. But we have to look at a few things before we head into that direction. There's a thin line, like I said, between that, and that line becomes starts from the use case of what are you using buy now, pay later for? Which type of customer are you looking at? If Edwin is coming to look for credit of $100 to buy a fancy jacket, is that what your fintech business is all about? And what's the payback, and how have you profiled it? The couple of things that come on board have onboarding Edwin, onboarding the user, the KYC, the credit scoring, the background check. So it looks like credit, but at the end of the day, where we part ways is the use case of why exactly I'm using the service. So fintechs will need to clearly define for the African market what it is exactly they're offering through a buy now, pay later scheme for, so that they do not replicate what a bank or a microfinance somewhere else would do. Yes.
Right, thank you, Edwin. And I'll turn to Sandeep now if you have any thoughts on this, on financial inclusion, but if you also have some thoughts on consumer protection. We're getting quite a few questions on the impact on consumers, if they're getting too much, if they're borrowing too much, how are they being protected and so on. So any thoughts that you may have on that?
Sure. So look, I think in the emerging markets, I think it's where the access to the credit is already a challenge, just because the bureaus don't exist, credit markets are not matured, capabilities don't exist. I think as a product and as a capability, it's an amazing opportunity to kind of build that into the emerging market infrastructure. There's another thing which allows this to inclusion, unlike the more matured markets or unlike the more evolved markets, where credit has now gone more mainstream and is being used for people always complain buy now, pay later is being used to buy goods that people don't need. Trust me, in an emerging market, buy now, pay later is being used to buy goods that they need to run their everyday lives, right? They are not going out there and saying, let me go buy a pair of jeans and let me go buy sneakers they don't want. They need that money to run their household. They need that money to run their small businesses. They need to run that money maybe to even rent a car in a gig economy, to be able to drive to work or rent an auto or rent something that allows them to get to work, are daily essential needs in the emerging markets of people. And I think if you start to think about what they use that buy now, pay later for, it's to make sure that they have 3 meals at the end of the day and have a living at the end of the day. And I think that opportunity is what's driving buy now, pay later a lot in the emerging markets, especially in the inclusion side, because you're actually using that tool to actually make them better in their own life. So in our case, in grocery, our tool is an enablement to saying, hey, we know you want to sell your goods, but I know it takes you longer to sell your goods. And so in this provision, we allow you to borrow money from us only to buy your inventory. We don't let them go and say, oh, I need it for renovations, I need it for other stuff. So it's very targeted. And I do think there's a massive opportunity in emerging markets to be really use this tool to make people's lives better. And I think that's how it needs to get used. And it actually works very well when then in that stance. So that's, sorry, you had said there's another question that I need to answer.
Yes, exactly. If you want to jump into that one, that'd be great. Which question is that? This is it's about it. There's a question about what's the range of interest rates? Sorry, is it 3 days, 5 days, 7 days? So we don't that depends. As any buy now, pay later today, there is no interest that we charge the consumers. In this case, as sari stores. It is depending upon the inventory cycle. It's a 5-day, 7-day, or even a 14 days. Right? It depends again to match the inventory on the size of the store. We do have a small processing cost, but the only time we charge a store is when the store doesn't pay on time. And that's the implication and impact. That's how you teach them credit, by saying, look, I will charge you a small upfront commission. You pay us on time, but if you don't pay us on time, we will charge you a fee or interest in that case. But other than that, in the scenario that we deal with, is we are very clear that if you are building credit, you're building credibility, there is no interest charge to you upfront. We do charge a small processing fee that includes collection, that includes capability, and the way, and again, this is a big question that people have to think about it. In the buy now, pay later, when you talk to small businesses, they don't see a large part of this as interest. They see it as, if I buy goods worth 3,000, in this case, pesos, and sell it for 4,000 pesos, am I willing to pay a small proportion of my 1,000 peso profit in order to get that 1,000 pesos? And so they see it in a very different way. When you talk to these stores, they'll say that, look, I'm happy to pay 1% of my profit in order to sell more stuff. And that's how they see it, as opposed to seeing it as an interest. And it takes a lot of insighting to understand how the small mom and pop shop see this business model. So I would stay away from this concept of interest, because it does scare them. And so, yeah. Right, thank you. I see Diedrich has raised his hand.
Yeah, exactly, because Sandeep mentioned that in some markets, the buy now, pay later is most frequently used for real essential products. In Europe, that's not so much so, but what we see here is that there's a real move from buy now, pay later providers such as Tinka to very much demand or articulate for which type of products you can get what type of payment period. So for instance, for items that don't have a very long life cycle, for instance, fashion items, you will never be able to make payments over a period longer than 12 months. Where, for instance, for a new washing machine or something that has a long lifetime value, that period might be extended. So I think there's really as well the obligation for the buy now pay later provider to assist the consumers in, listen, this is a type of product that lends itself for a long payback period or not. And on the other side, and I think this also relates to a question, when does it convert to debt collection? I think buy now pay later providers have a fantastic position to also help people who are not fully included in the financial ecosystem and therefore cannot build a credit score, to help build them that credit score. And for instance, if we look towards the US, I think there are few to none buy now pay later facilitators that actually allow their consumers to build a FICO score. So that if you're not included in that financial system, how then are you going to build a credit score? And I think this is really where buy now pay later can add tremendous value to including people in a financial system.
Mm-hmm. Yeah, great, thank you. Diane, I want to circle back a little bit to you on if you have any thoughts on the consumer, the risks and affordability checks that are carried out on consumers. I know that you have done quite a bit of work on this.
Yeah, and I might sort of pick up on some of the questions that have been asked in my answer as well. I think, in terms of what the Buy Now Pay Later Code in Australia has done, which is a form of self-regulation, it sort of hasn't answered the question, is it a credit product? Is it a financial services product? Is it a platform? Is it a payment solution? It kind of ignores putting it in a box, because it's created an environment with the code in terms of the standards that make sense for how this product operates. And as we've heard, there are very different business models, not just in Australia, but across the world as well. So if I think about some of the consumer safeguards that have been built into the code to enhance financial inclusion and the access benefits that we've spoken about, but to make sure that consumers that are more vulnerable or consumers that are experiencing financial difficulties have protections, I think the first thing is that the code requires upfront and ongoing checks. So the initial check and then ongoing to make sure that consumers are continuing to use the product in a way that is suitable for them. So they start low transaction and they can build their profile in terms of, as Diedrich said, building their ability to be able to demonstrate use of the product. In Australia, the code requires every provider to have financial hardship programs. So if a customer is experiencing difficulty, they can ask their Buy Now Pay Later provider for support and restructuring their repayments. Only 0.34% of customers last year needed that sort of support, and that's through a pretty tricky COVID disruption time as well, where people's personal and financial circumstances were changing with lockdowns and so forth in Australia. It's a very small number, but it's not an insignificant number. And what we've learned about those customers is some of the things that have helped them are actually already built into the code or the product features of the products in Australia. One of the other things that in Australia is that if you miss a repayment, you're not able to continue to use the product. So you can't get into a debt spiral. It is prevented. So that's one way of making sure that consumers, and that's why they like it, is they've got a sense of control around their spending. So product features. The other one is that you have to make a payment upfront within a really quick period of time. So you have to demonstrate you've got that cash flow as well. But along with the product features are the financial nudges. And I think that's a really exciting part of it being an embedded technology product. Is that consumers are being reminded about things and they're getting information about how to maximize the use and stay in control of their spending. And then, as I said, then there's those safeguards in place about dealing with financial hardship. In Australia, there's also a commitment that a consumer will never be taken as a bankrupt. If they do lose control of Buy Now Pay Later, they will be supported. And a couple of other things that the sector has done in Australia is responded to consumer groups who had told us about some of their concerns with certain products and services. So the Buy Now Pay Later providers have committed that you cannot use Buy Now Pay Later for gambling services or to purchase weapons. So there's been a really positive and proactive stance in relation to making sure the product is, not just sustainable financially for customers, but also helping minimize harm more broadly within society as well.
Great, thank you. I see we're getting lots of questions here, which is great, and we'll try to get to as many as possible. Time is ticking and we have lots of interesting questions left. And we have now spoken about what BNPL is and a bit about consumers. So I'd now like to turn to the retailers. So, I'll start with you again, Diane, and then we'll move on to Diedrich. Get ready. Diane, what are the benefits for retailers? You talked about the consumers, but what's in it for the retailer?
Well, so I'll start with the cost first, because I think there's been a question as well as how do you make money out of this if you're not charging interest? In Australia, there is a merchant fee. Right? So there is a cost for it. This product is not for free. It does cost somewhere in the system. And the way it's designed is it's to minimize the cost and the frictionless for the consumer, which is why it's attractive to them. And there is a fee for merchants. So what are the benefits for merchants? I think everyone has touched on this a little bit already. The main thing is managing inventory and cash flow. I mean, one of the things about the old lay-by is that, you had to store the product on the shelf. You had to manage the financial risk of a customer repaying or not. Now that's intermediated. That's what the buy now, pay later providers are providing benefit to. There is no sort of inventory storage issues. There's cash flow up front for the business. They're able to manage their supply as well as their customer management as well. Involvement in terms of managing that, as I said, payment side of things. There is a benefit there in relation to customer relationships and that kind of thing. But the big benefit for retailers and merchants is an access to a broader range of consumers. So raising their brand awareness, creating brand loyalty. It's one thing is consumers are really looking for, and particularly in Australia, are looking for the best products, the best deal. This is a way for retailers to access different consumers they may not have been able to get through sort of more traditional marketing channels and that kind of thing. So there's customer management, there is inventory management, there's reductions in business costs, there's increases in terms of access to customers and markets. That's ultimately, why in Australia it's sort of contributed $14.3 billion towards our GDP last year, and also employed around 100,000 Australians. So it's a really important part of our economic recovery and economic transition in Australia, apart from all the consumer benefits.
Great, thank you. Diedrich, any thoughts?
Yeah, so there indeed fully agree with what Diane said. That there are a few other added benefits, I think, as well. So compared to, for instance, wanting to accept credit cards online, adding a buy now, pay later system to your infrastructure is a bit easier. It provides the consumers more choice. It also, in Europe specifically, results in a higher basket size, a basket value. So the revenue will increase. On the downside of that, more often products get sent back, but that's a balancing act which each merchant will need to make on their own. And as well, as a merchant, you are guaranteed the payout of the products that are not being sent back, and the settlement period is quite soon. So that also alleviates the risk of non-payment for you as a merchant. You're on mute, Lotte.
Things we've never learned, do we? 2.5 years in lockdown and we still are on mute. Edwin has his hand raised.
Thank you. Just to add on to what my colleagues have said, there's a massive potential for merchants to onboard new customers, do some expansion, and even there's a very high possibility and opportunity for cross-selling different products under the buy now, pay later scheme, because you can twin up products under that scheme and have them off your shelf, probably if you have been having slow outrun of those products. So, and then it's also another very good customer acquisition tool for customers who then had little resource or could not afford, or had that fear of not being able to afford, and then you can bring them on under such a scheme. Thank you.
Thank you. Great, and I'm going to keep you online here, Ed. I'm going to ask you a bit of a question, because we are experiencing a bit of kind of economic uncertainty at the moment. So this is kind of moving beyond retail and customers and so on. how do you see it? Will the BNPL market thrive or die under a tough financial recession? Is the BNPL model sustainable?
Thank you so much. If we're looking at the we don't want to call them. Let's call them stats. The projections for 2021 said it grew by 125 billion. Africa's BNPL market is estimated to be worth about 3.9 trillion by 2030. So the opportunity is there. The need is still very real because we know we have a couple of problems, not only Africa, but worldwide. So even as we are in the economic crisis and we're going through some hard times, this is the essential reason why we should actually apply sensible use cases for buy now, pay later schemes across the board. And when I say sensible use cases, I mean to exclude some things my colleagues were talking about. For example, you won't go under BNPL scheme to buy a fancy watch, but correctly applied, this product, this innovation has the massive potential to, one, alleviate economic crises, and for customers who are looking to cut back cash spend and cater for people's more important daily needs. And then that would help communities and different small medium enterprises sail through these difficult times. So I think this is the time to actually refine what the business models are. I think the model is sustainable depending on what sector you're serving. If, like I said, again, it comes back to use case and what your vision is as a fintech or as a business provider. If you are in BNPL business to supply luxury goods, that may not be sustainable because that's a one-off. If you are in BNPL business to address daily needs and recurring expenditures, you're going to have regular business and you'll be addressing what people need. So yes, it is sustainable depending on the use case. And I strongly believe this is the time that we should refine this innovation to actually apply, and most especially for the grassroots in emerging economies that cannot afford certain things because of their seasonal patterns of earn. Thank you.
Great, thank you. Diane, you have your hand raised.
Yeah, I was just going to say that this is the question that I get asked probably the most in Australia is BNPL going to survive? Is it going to survive tougher economic conditions? And I think the answer is partly is the business models will adjust to be able to deal with the changing interest rate environment, that kind of thing. Part of the affordability checking process in Australia, which is very proportionate, so it becomes more onerous, more detailed, more information and data needing to be collected the higher you go up the value chain of what the transaction is for buy now, pay later. So at the smaller, low value transaction, and I'll just sort of pick up on the question about money laundering, lower money laundering risks, so less requirements. But yes, our money laundering regulator is also regulating buy now, pay later in Australia. So they need to meet the requirements of that law. So I think in terms of the affordability checking, it is good for consumers to make sure that the product is suitable for them. But the process is also good for the buy now, pay later model that is really developing, their own proprietary AI systems, which are sucking in data from different sources to make more intelligent decisions. So it's data-driven decision-making that is driving the ability for these business models to respond to economic conditions, and they will continue to learn as we go through this cycle.
Great, thank you. Diederik, very quickly, we're quickly coming to the end of this session.
Yeah, I'll keep it extremely short because just following up on Diane's note on money laundering, of course, there are very, very few, none that I know of, buy now pay later solution that accept cash payments. So the way that these payments are made are already in the digital ecosystem. So they are already checked for money laundering at the first stages. That doesn't fully put the buy now pay later industry out of scope of any anti-money laundering, but it's not as critical as where cash transitions to digital cash.
Great, thank you. I'm going to turn to Sarah now, because this session has zipped by very, very fast, and I feel as if we have so much more to say. But Sarah, if you just want to lead us off, where to from here? When is the product ready for more regulation, and what are the outcomes we should be looking at? How can we ensure BNPL is provided ethically and sustainably?
Well, I've been frantically taking notes for the last hour and trying to pull together some thoughts. So firstly, I sort of think we've heard from Diana that actually buy now pay later may already be regulated, definitely in some countries, but actually adapting what already exists or adding a sentence or two here and there actually can help us regulate. So I think we're in many markets ready for that, but also we don't want to over-regulate because that stifles innovation. And actually, what's really, really key for me, and when I first thought about buy now pay later, I was very worried about the level of debts that people can get into, and that worry hasn't gone away. But what has become clearer the more I've researched and look at what's happening out there and good products is that actually it's really key for consumer choice and access. If we get it right, people are able to make the right choices for themselves and access products and services, that they maybe haven't had before, and it can provide a route for them to grow and access even more, and I think, we've got to remember that a lot of these, what is buy now, pay later probably already existed fairly informally. We know it happened in agri, and also, Sandeep will probably say it happens, in his value chain as well. But by bringing it into the digital space, we're helping things like, AML, but also creating these digital trains, that actually creating this data that can be used if we feed back into credit bureaus, etc., to create credit history for people who really have none. I think, if we are creating this code of conduct for buy now, pay later providers to have, I think that's great, because actually what we're doing is making sure that the product that we're giving in and the conditions of the buy now, pay later are tied to that product. So shorter term for, more convenient goods, longer term for larger sums of money or goods that are going to last for a long time seems to make, real big sense. And, looking at the different business models and the different use cases, actually we can tailor the product to make sure it fits. So making sure that it's appropriate and suitable for the person, for the individual that's consuming, but also the type of good it is. And, Sandeep's is a great example of how, actually you pay back in a cycle that makes sense to when you're selling your inventory. That way we're going to hopefully have a lot less defaults and problems with paying back. And starting low and building up, we're not talking about wanting to give people, thousands of dollars in equivalent lines of credit through buy now, pay later instantly. Actually, we give small, and then we increase that as we see the consumer behavior change and respond to being able to expand their use and understanding. So I think we really keep back to going to people, as long as they understand what it is they're getting into, what they've got to repay, how their installments are going to work, whether, and using the concept of short-term and long-term, we can actually, it is a great, I think, you use the word nudges, it's a great way, Diane, to actually start to educate people as they need it, right? We know financial education doesn't work if you sit and listen to a lecture, but actually if we can give those, nudges towards understanding financial, your products, your services, your choices you're making, hopefully we will end up with consumers who have something to rely on during difficult times. And for merchants, ways to attract new customers and continue with revenue streams, because that's really key for continuing building our economies as well through these difficult times. So many positives for buy now, pay later, in my opinion, if we really think about the consumer, the product, and make ethical and and have regulation that supports that.
Great, thank you, Sarah. And that brings us actually to 1 o'clock sharp, at least in my time zone. Thank you all so much for joining in on this really exciting webinar. And with all the questions and interest, I think there will be we could probably follow up with several webinars on this topic and just taking different angles on it and doing some deep dives. Happy to hear from anyone if you have suggestions of another webinar and topics that we can address. Really look forward to that. Thank you again for everyone who joined in, and thank you so much for all our panelists. And just a reminder, if anyone who wants to stay on for the MOU signing with Gift in the Alliance, please do stay on. But otherwise, pleasure to see you all and hope to see you soon again. Thank you.